Get ready for a major bottom reversal signal. Why is that? Because right now there's good evidence that the candlestick reversal indicators are starting to get out of whack and a reversal is about ready to occur. Remember a couple weeks ago when we demonstrated when to start taking profits on Tesla because of the simple rules that apply to human nature. For example, Tesla had been in an uptrend, and what told us to start watching for a reversal? You started seeing exuberance and moving too far away from the T line, which gave us the prospects that eventually the price would come back and test the T line. You can apply that same rationale or use the same indicators for projecting that there might be a major reversal in the markets. Remember, we could identify when the selling started, when you had a candlestick sell signal and a close below the T line. Sold off hard. Friday, what did we see in the Dow? A hammer type signal, but more importantly, what other indicators told us that this was a good prospect for seeing a reversal? Look where we are. We're in the oversold condition. 2, look at the gap downs in the oversold condition. And 3, look how far away you are from the T line. This gives a high degree of probability that any positive trading could at least have a few days bounce back up to the T line area. At the same time, the Nasdaq provided a different signal. This is what we call a belt hold signal. Notice how it gapped down and came back up into the trading range. More importantly, we call it a meeting line. Notice how this candle right here opened and closed right here. Then they gapped down and brought the price right back up to the same level. A meeting line, any positive trading from here, especially with the oversold condition and that far away from the T line, would imply at least a bounce back up to the T line. When we say at least a bounce, that still implies that there could be 2 or 3 days of good positive trading, buying stock or options on a positive trading on Monday could give you some good profits. And 2, once it gets to the T line, we're going to be able to identify whether the T line is going to act as resistance or whether they're going to push right through that level. As we saw, there were some very good shorts over the past few weeks, such as in the travel stocks. What am I trying to say? The cruise stocks. Except we saw, like in Carnival on Friday, a doji followed by a bullish engulfing, a left-right combo. A possible quick pop back up to the T line and maybe back up to the gap area. And note how far away Norwegian cruise lines moved. Again, with a left-right combo. Another possibility of some quick profits, buying calls or the stock, coming back up to the T line or filling the gaps. Even some of the biggies, such as Apple, also did a meeting line, belt hold, gap down, came back up pretty much right to the same level that it closed the night before, but coming from a different direction. Once again, note how far away you are from the T line in the oversold area. These makes for very high probability prospects of quick profits bouncing back up to the T line. Remember, one of the most powerful indicators when it comes to human nature is the T line, the 8 exponential moving average, which has Fibonacci characteristics. That the further away you move from the T line, the higher the probability they're likely to come back up and test it. That information allows for a high probability reversal trade that when you see candlestick reversal signals that far away from the T line, you've got a very strong probability that a reversal is about ready to occur. Do we know where it's going to? No, but we know the probabilities would be in our favor to buy on positive trading on Monday. That'll be it. We'll see you in the chat rooms.